Hi, everybody. How are you all today, this evening? Wow, quite the turnout. Wasn't expecting to see so many of you, but I'm happy you're here. I never know what to expect with these late afternoon, early evening sessions, but I figured it was about time we did one because it's been a while. The last Q&A was early and a lot of people couldn't make it. So hopefully some of you are making this session who were unable to make the one before. Midnight, huh, Ranjit? I mean, we will have another early one, unless you're just a typical night owl, but I'm glad you're here. I appreciate it. How about if we all just kind of type in the chat box where we're all located so we can kind of just look to the left and look to the right and say hello to all our fellow brethren, comrades in arms. Wow. From Scotland to New York to Canada to Oregon to Pennsylvania to Missouri, Houston, California, of course. Hello, James. You and I are neighbors practically. Minnesota, Tokyo, Japan. There you go. Cool. Indianapolis, Atlanta. All right. As you can tell, we're a small community, but we spread out. We're all over the place. All right. So every now and then, I like to do these Q&A sessions just to help everyone get sorted out with what might be giving them problems or hurdles or obstacles or have to know questions or whatever, whatever's on your mind. But I thought we'd maybe focus on a specific theme this evening called touching up. Basically, everything is working pretty good, but what can we do to get it better? Or you just kind of hit the ceiling and you need to know how to bust through it, or you're just kind of at that roadblock or whatever the obstacle might be that is hindering you. So while you can ask any question you want, and I'm happy to answer whatever's on your mind, if you stay focused on maybe the one thing, if you had to choose one thing, maybe two or three, if that's really how many there are, but see if you could focus on the one thing that if you could just overcome it, it'll make a big difference and you'll get to that level of, finally achieving some profits on a consistent basis. And I know that forces some of you to dig down deep and really, figure out what that one thing is. But let's see if we can, I don't know, I just thought let's try that first, see what we come up with, and let me see if I can help you solve that issue or give you some suggestions on how to move beyond it. But I don't want to just monopolize the whole session with that theme and maybe something else that's bothering you, or maybe you're just a beginner and need some upfront getting started advice, and that's perfectly valid too. So I'm going to kind of let you guys lead the way. And if we have a little time as we get further into this, if you guys want to take a closer look at Spotlight 2.0 or Sub-Zero or even Counterpunch, doesn't matter to me. Let's just see where this goes. All right, so James with a really good question, and it's funny, not only are we both in California and having to get up when it's still nighttime, but we must be thinking alike, James, because it turns out my matrix was corrupting my my other trade desk, and I kept having problems getting TradeStation to open. Finally got it resolved, and then I started thinking, I wonder if we're going to talk about placing trades with bracket orders today. And lo and behold, it's the first topic to come up. So very cool. This is something that obviously will help everybody, especially the new people that haven't really seen me talk about it before. So let's do this. Before we get into the details of it, I do want to show you some resources that you have at your fingertips, because once this session's over, you'll probably scratch your head and go, what did he say again? And so I'm going to open up the Owners Club really quick so that we can kind of refer to that here and there and show you where you can find stuff. So one of the things I want to point out is that getting started video. And some of you have seen it, some of you have not seen it, some of you say you've seen it but then don't remember what's in it. I would recommend you watch it again because it really shows you how to get around the website and where to find things, which will be helpful just in general, right? So when you first open up the Spotlight Power Trader, the Getting Started tab opens, and you have this Welcome to the Spotlight Power Trader video. This video is designed to show you where to find stuff all around the website. Like a lot of you didn't know that you can click on you can actually click on the green tab. A lot of you are clicking on the sub tabs and never knowing you can click actually on the green tab as well, and that's the main tab. So, I mean, just that alone is pretty valuable information. In the training, and I don't even remember where it is, so I believe, well, here's your Think or Swim. Yeah, I believe it's probably in the other, one of these special sessions, supplemental training. There is a video on how I use the matrix, and funny, I can't even find it now. So it's in there. I'm going to have to put it in a place that's easier to see, but it's somewhere in here, and I forget where. But yeah, anyway, I thought I was going to be able to pull it up and just show you where it was, but nothing's that simple, is it? We'll find it. Anyway, there's some good videos on it, and it's there. It's definitely in YouTube. Yeah, that's true. It's on the Owners Club in what should be a logical place. I just don't want to spend too much time looking for it. So let me point out to you what I typically like to do when I'm trading. So for example, let's just take crude oil. Or is there a market that's actually moving right now? Not really. Well, I don't care about Forex at the moment. Doesn't really matter. Let's just open this up. So ultimately, if you right-click on your chart, you can go to chart trading. And I recommend you start there. When you open up chart trading, this panel on the right opens up. If you want to trade with a bracket order, then you want to attach OSO right here. That's order sends order. That right there is a secret to a bracket order. Then it's just a matter of creating the template so that every time you put that trade on, it'll be the same. And then you can just slide your handles where they need to go. So if I want to do 2 positions, for example, I put on 2, and I want to choose these 3 dots here and make sure that I've got my handles in the right place. So I've got a 20 tick target and a 20 tick stop. Okay, now it's only showing 1 position each because I have to also choose the right thing off this drop down. So let's do that first. If I'm going to go with 2 positions and I want to go to, say, target 2 and then have the choice to go to target 3 or 4 or even trail, and I want my stops in the same place, I'm going to pull this down and choose 2 limit 1 stop. Okay, so now when I click on these 3 dots, now I see I've got 2 different positions. And you'll notice one of them, the limit, that's my target. One of them is 20 ticks. And the other limit on the second position is 25 ticks. And both my stops are 20 ticks in the same location. So now when I place this trade, I'm going to have 2 targets that are offset and 2 stops that are in the same location. It makes it easy to maneuver my trade. And once I got that set up, I'm going to set it as default right here. It's very important. And then hit OK. Now I've got a 20 tick and a 25 tick target and a 20 tick stop. And no matter when I turn on chart trading, 2 positions with OSO, as long as I set my exit bracket to 2L 1S, that template will be there. So now if I click on this little plus sign, let's just pretend that's a trade we're interested in. If I hold the Alt key down, it'll give me a short trade. If I hold the Control key down, it gives me a long trade. So that's a short setup, even though it's filtered. Let's just place it so you can see what it looks like. I'll hold the Alt key down and I'll hit my left mouse, and you can see my trade right there. And I can give it more room if I want. You know, I could give more space on the chart or just slide it over. So you can see my market orders, 2. Here's my 20 tick target and my 25 tick target. Now, one of the things that's really important is this little gear down here that you can hardly see. You want to click on that, go to order settings, and make sure the bottom radio button is clicked so that when you move your 2 stops, they move together. If the top is clicked, you'll only move 1 stop at a time, and that's an additional maneuver, and it takes more time. So set it so your stops move together, set it as default, and hit OK. So now I can move my stops that move together, and I don't even need the data window because I can see the dots. But if I want to really be exact, and sometimes with certain markets, like with the NQ or unleaded gas, where the ticks are smaller, you could tune it perfectly because you got the numbers here in the data window. So if I'm going to target 2, for example, one of my targets is now at target 2, and I can put this anywhere I want. And if I want to trail, I can just delete it. So now I have 1 target and 2 stops. So if this triggers in and comes down and hits this target, because they're attached with a bracket order, one of the stops will delete, will go away, because when the target's hit, the stop gets canceled. The other stop will still be there. Of course, it'll be more in this area because it would have hit money management, and then we just continue to use that stop to trail. Okay, so that's how you set up a bracket order on your chart. Now, on my other monitor, I have my matrix configuration here. And let's get over to crude so that we can see it. Obviously, I have to update this still to the Z contract. And there's my order. You can see the order shows up on the matrix as well. And you might be thinking, well, why do I have 3 matrices? And I'll show you in a moment. First, I want to show you this radar screen here. I think that's a radar screen. Yeah, radar screen. With this radar screen, and I have them all set to 5-minute charts. I don't really care about what this is. But notice I've got the green button turned on all my windows, so that all I have to do is click on one of these symbols. Let's update unleaded to the Z contract as well. But by clicking on one of those symbols, it automatically moves the matrices to those symbols too. So I don't have to have a whole bunch of workspaces open using up all my TradeStation resources. I could just have these 3 matrices and the radar screen and just quickly go from one to the next. And that was a big discovery for me. So you guys should have access to radar, the radar screen. I'm pretty sure you guys do. That should be part of your promotion, I think, with Mitchell. All right, so anyway, I have 3 matrices here, and the reason why is because, let's start with the one in the back top. This one here is for placing stop limit orders instead of stop market orders. On the chart, you only have the option to place stop market orders, from what I understand. So for example, this trade here, it says STM. That's a market order. So when this comes in and triggers in, most likely I'm going to pay some slippage. Canty, on the 5-minute interval, I just have that on there, but I'm not really changing my intervals. I don't have any charts. That would be if I had charts. You know, you could attach a chart with a green button also, and that would change as well. But because I use different charts for different symbols, I'm not interested in the charts. I'm only using the radar screen to toggle my matrices. So it doesn't really matter what you put in there. Okay? So my point is that on a market order, especially with TradeStation, you're most likely going to pay slippage. It's rare that you don't. And let's face it, 1 tick in slippage on crude oil with 2 positions, that's 20 bucks. That's expensive. It's a lot more than the commission. That's for sure. Some people ask me why I still trade with Think or Swim, which is really just, you know, you have to be a real masochist to trade with that. But I still do it. One thing I like about Thinkorswim, even though the commissions are higher, I don't pay nearly as much slippage. Go figure. The only thing is it's just hard to hit your target because it's jumping around like a Mexican jumping bean on steroids. So that's the problem. But anyway, one solution is instead of placing your trades on your chart when you have time and when the market's a little slower, is you can, let's cancel this trade here really quick. You can place your trade on the stop limit matrix. So let's say I want to place that trade again. I forget where it was, 66.19 we'll say. And when I click on this, notice that when I'm hovering over it, it says sell to stop limit. So now when I click on it once, there's a question mark, and it's asking me what is the limit I am willing to pay. If I'm willing to pay 1 tick of slippage at the worst case scenario, I can click one below. But if I don't want to pay any slippage at all, I will click on the same price of 19. And so there are my 2 trades, and there's my 20 tick and 25 tick handle and my 20 tick stop, and I can slide them to where they need to go. I can look at my data window on my chart to tell me, right? So I can set that trade up. And if it comes down really fast and there's no one on the other side of the trade, I might not get filled and miss the trade altogether. Most of the time, though, that's very rare. Most of the time, you do get filled and you don't pay slippage, and that is worth it. All right, so a lot of times it'll blow right through and you don't get filled, and if you did get filled on a market order, you'd pay a lot of slippage, a lot more than usual. Maybe that's a trade you don't want to get filled on. All right, but anyway, that's how I set up my matrix, and you do it the same way. If you open up this panel here, you got the exact same thing where you set up your, you know, your 2 limits, your 1 stop, attach OSO, 3 dots, got the same template, everything's the same. So it's really quite handy. All right, so that's my stop limit order. Now, why do I have one in the back and lower offset? And I always have it in the same place. So I always know the one in the upper corner is my stop limit order. The one that's a little lower is the exact same thing, but instead of a stop limit order, it's a stop market order, just like on my chart when I'm chart trading. The reason why I would use this is when I have a stop and reversal. A stop and reversal, you don't want to use a limit order because you want to get filled on your reversing trade. And more often than not, I don't know why, but you stop out of the first trade and don't necessarily get filled on the reversing trade, which defeats the purpose of a stop and reversal. So I'm willing to pay the slippage as much as I don't want to ensure I'm getting in on my reversing trade. And so I have to remember then, and this takes practice, this is what repetition is all about, practicing over and over again until you perfect it. I click on the one that's a little bit lower, and let's say I'm in the trade, then I place my reversing trade. And I move my stop to match, and et cetera, et cetera. Okay, so that's how I use those 2 bracket orders. And when you're in a trade and you're trading live and the market's moving around quickly and you don't have time to think, you only have time to react, you better have confidence in your trade plan, and you better have practiced how to execute it over and over and over until you can do it without mistake. Because that's just part of being professional, best practices, and succeeding as a trader. And the good news is that anyone can do that. It's just a matter of practice, like anything else. That's the good news. All right, so why do I have this matrix on the left? Simply because this lets me maneuver in and out of trades with a single market order position. So what if I'm in multiple contracts and I'm trying to get to my target 2 and I miss by 1 tick? I could easily market out of one of them right here, sell at the market, or push the stop or whatever, and get out of one of those positions. I just have to remember then to come over here, click on the arrow, and then cancel one of my stops, and it may not be the one that's attached to the other trade. There's a lot of things you have to start paying attention to. The important thing is that you can maneuver in and out of your position with a single market order. Gives you dexterity. It's just that when you finally think you're flat, double check and make sure you're flat. Hit the cancel all button. Make sure you don't have a stray order, and make sure you don't have a stray position. You might have a stray position. You got to make sure you double check. And you could have another window here. You could have your trade manager window. It doesn't have to be open, but you could have it available, and it's also connected with the green button, and you could check your positions and make sure you don't have any. So this takes some getting used to, but you can have it all tied together to the radar screen. Okay, so this is really handy. It's also a reason why I have multiple monitors when I'm trading. The other thing is before you click on one of your columns or one of your matrices, always click first off some dead space. Click once and then come over. Because if not, if I were to come over here and start clicking on the column, the first click is just going to activate the window, and it's not going to actually click on the column. And so accidentally you can screw yourself up and delete one of your handles or put on an extra trade or not put on one without really knowing. So if you get in the habit of always clicking once off the dead space and then click on the matrix, you will save yourself a lot of grief and problems. Okay, that's a little piece of just user experience advice. Click on the dead space and then click on your active columns, okay? And that's basically all I got. I mean, that's how I do it. It's all variations to that theme. You could do very well with just chart trading, but knowing you have your matrix next to you in case you need to use it for whatever reason is always a good thing. What else? A couple questions here. Bob Lynn says, please define slippage. Bob, slippage is when you think you're getting filled. Like, for example, my entry is at 66.19. And what happens is the bid hits that, and there's a one tick spread, and you get filled, or there's no one selling at that or buying at that level, and you end up getting filled one tick lower or two ticks lower. And so you don't really get in where you think. You're supposed to get in at 66.19. You check your fill at 66.17. Yuck. 2 ticks of slippage. If the slippage is obscene, and it is sometimes, there has to be someone on the other side of the order. I'll call the broker and make them look at time and sales and prove to me why I got such a crappy fill. And a lot of times you win that case. As a trader, it's a good idea, if you don't like your fill, get in the habit of calling the trade desk and make them prove it to you. Every now and then you'll win the battle and you'll get a few extra bucks put back in your account. But it's just a good habit to get in. It's just part of trading. There's no perfection in trading, and there certainly isn't any perfection in executing trades. And the broker is often not your friend. I don't really know if TradeStation takes the other side of the trade or not. Never really asked. I guess I should. Thinkorswim claims that they don't take the other side of the trade, and you're just trading with the market. Maybe that's why the fills are better. I don't know. Yeah, maybe not, but I don't know what the reason is, but it seems like the slippage is practically 100% guaranteed. Now, you know when you don't get slippage is when you're pulling back to the price. So let's say the price comes down, and then I place my order, and it pulls back up, and then fills me on a pullback. I find that usually there's never slippage in that case. Never say never. Usually there's not any slippage. But when you're trading through on a stop order, usually there is slippage, at least with TradeStation. Well, how close are we to getting to automated filling a trade? Well, I mean, we have automation, James. It's just that it's just not It complicates things. It's harder, not easier. Let me give you a reason why. Let's say you want to take this trade right here at 66.07. If you have the automation turned on and all the settings are correct, it'll fill you when this price comes up. But if you look to your left, you've got a spike at 66.08. So do you want to get long at 07, or would you rather get long at 09 and make sure it's actually going to push through what could be a little resistance level there? So I would automatically adjust my entry up 2 ticks. Now I might not do that. I mean, if the trade's real small, I might not do that. But what if I want to do that? Or like this short here, maybe you want to adjust around that swing level. I don't know. I'm just picking examples out because they're right in front of me. But if you want to make little maneuvers, now you got to scramble to turn off the automation and then get your trade placed on time. That's just one example. And anyway, if you use bracket orders and trade right from the chart and you learn how to trade like this, you're going to be better off because you're going to be more engaged with your chart. In my opinion, a lot of people don't agree. That's fine. That's what makes a market. But I'd rather see you actually placing the trades manually. We have automation. It works pretty well. It's not perfect. And what if, and this happens too, what if the automation in the system thinks you're filled, but your broker didn't fill you? Now what? Now you're scrambling to check your fills and your positions and make sure you're in sync with your automation, and it can get pretty messy. That happens. Okay? I mean, I don't know. For me, automation is great for doing research on swing trade charts. That's about it. I don't really see the value in them with day trading charts. I do see that if you have something that you're used to turning it on and off and you're used to taking manual control and you can do it quickly and you practice, okay, that's different. But it's more advanced. It's not necessarily easier. But once you practice it and get the routine down, yeah, it could be easier. I could see that. All right, so let's, that was a really good question. I mean, that took a while to explain. We're already like 30 minutes in from the one question, but thanks for asking that. Let me move on and see what else we got here. Len says, when a yellow trade appears or any other color while the bars are gray, is that a valid trade? So the one thing that is important to understand, like maybe this one, tell me if this is what you're thinking about. So you have a gray bar and a yellow trade. Is this the situation that you're referring to? I just want to make sure we're talking apples and apples. Okay, so keep in mind that the colors do not change until the trade is triggered in. So at this point in time, the bar closes and you have a trade setup. That's all it is. It's a setup. What if it goes the other way and cancels? So the bar will stay gray. The only time it's going to turn red is if it triggers in, which it does on the next bar. And remember, everything about the Spotlight Power Trader is based on the bars closing, as far as how the code works and how the indicators work. Calculator. The bar has to close for it to be a valid setup. So thinkorswim traders, you have to get used to setups that happen intra-bar, before the bar closes. You have to wait. And sometimes it'll appear and disappear and appear and disappear because the bar is still forming. That's just one of the, deficiencies of an archaic old platform that hasn't had a facelift in a long time. But luckily with TradeStation and Ninja, we don't have that problem. You have to make sure, though, that your calculator is not updating intra-bar and only updates once the bar is closed. But, I mean, if you look at the pink trade, same thing, right? It's gray, and then it triggers in and turns red. Here it's gray, and then it triggers in and turns green. So it's going to be gray because at that point in time, it's not a trade. It's a trade setup. It becomes a trade when it's triggered in. That's when the color changes. Okay? The strategy exists beyond the dots and the colors and takes some getting used to, but hopefully that clears that up for you. Puggy Man, which is better to scalp with, HO or unleaded? I just use CL. Which is better to preserve your Moby with? Well, I think your money. Okay. Well, I think that unleaded might be better only because of the volume. I think that a good idea would be to put them both side by side, and I think a 20 tick momentum bar would work fine with unleaded with heating oil as well. I haven't looked at heating oil in a while, but I mean, heating oil really is explosive. So you said scalping. If you're looking for runners and big trailing moves, heating oil might be better. I just haven't looked at it in a while. In fact, I've done a bunch of testing in the past where with heating oil, you're better off not even using targets at all and just trailing every trade. The profits are just that much more dramatic. So that would tell me that heating oil might not be the best scalping chart, but maybe the better let it run chart, right? Did I type it in right? Doesn't look like I did. Let's try that again. Yeah. So when we look at this unleaded gas, well, unfortunately, we're not going to see any volume because it's too late. You know, the markets are closed. But what you could do is go to insert analysis technique and throw a volume study on there. This is your basic volume. Just thicken that up a little. And so now you can kind of get a sense of the volume, right? You can see some 500 spikes, et cetera, et cetera. I mean, better to do it when the markets are open and you actually can look up here in V where it shows you the amount of contracts traded. All right, but let's look at heating oil now. Let's do the same thing. Put on a volume chart or volume study. And I mean, it has more volume now than unleaded. I mean, it could be that the volume is picked up on heating oil, but I'm not seeing a lot of, I'm not seeing a lot of 500 spikes. There's definitely some 350s. So I don't know. I mean, I think you check it out in the daytime when the markets are showing. And, you know, what you could also do is do your sniff test, right? You know, the 3-step sniff test. Are there enough trades in a session? Are the trades an appropriate size? Can you quit positive most of the time with minimal trading? So you have a start time, a stop time, and a certain amount of trades each day, your power of quitting, your basic rules for a trade plan. And then you start counting winning, losing, and break-even sessions. Yeah, so Canty's saying she has a radar screen set up to include volume. Yeah, maybe. Maybe. I haven't really played with that, but you know, these patterns kind of work on their own. But I mean, looking at, let's say that we want to do a random sniff test on heating oil, and today is just any old random day, and we want to start at 9, which is the normal time we start with unleaded and with crude oil. So we just look for our 9 o'clock start time, and here it is right there. And there's your first trade. Maybe you have enough time to get in, maybe you don't. It looks like you might. I don't know, over a minute till it closes down here. And you can see that the first trade of the day is a winner. And that goes into the win column. And then you move on to the next day. So imagining this is a day like 100 sessions ago, that goes in the win column. It's a session that won on the very first trade. And it was 85 ticks to target 2. That's pretty good. Unleaded on the same day, and this doesn't tell us much, it's just a quick sample, you know, one trade look, one session look. but I think heating oil would probably do just fine. Where's our 9 o'clock start time? So it's almost the exact same trade as heating oil, but because you're inside the squeeze zone and it's pushing up, it's not letting you take that trade. So this looks like it could be a losing trade, but if you look to your left and you got your spike right there and the spike goes up to 72, maybe you're putting your entry at 73 and you might even be going a little higher to get it above the 50 50 EMA. So I'm okay making up to 10 tick adjustments on unleaded and heating oil because 2 ticks is less than 1 tick on crude oil. So if you think about it, I'm okay with trying to not get long here unless it pushes through. This does spike up to 72 and it doesn't even get to 73. So while that looks like a losing trade, if you're making smart little adjustments around your spikes, like I always talk about, you avoid getting long. And I know we're just kind of getting into off-topic stuff here, but then that trade there, that's 58 ticks a target too. This gray one was 79, almost the exact same size of heating oil. So unleaded and heating oil, I mean, I don't know what's better, but they both seem like they'd be very good. Unleaded obviously has a lot of winning trades and every now and then some losers too. But you should be able to quit with a positive result a majority of the time with minimal trading, and that's the whole idea to Spotlight. That's the goal of Spotlight. If you stay focused on that, you'll do very well with Spotlight. It's the goal of achieving what the trade plan is supposed to do for you. Did you guys see the email I received from Charlie today? He sent me an email. It was beautiful. I mean, talk about doing things right. I put it in the Facebook group page. I got to share it with you guys just because it's really inspirational. Let me find it, and I'll show you what he said. And it's a lot of just, there's so much in there that makes sense. Let me just get that for you guys. So anyway, good question, but I don't know the answer, Puggy Man, but you certainly have the tools to figure it out, right? So I'm just going to paste this message into the chat box for you guys. And you guys can just see this for yourself because it's right along what we're talking about. Go ahead and read that for a moment. And I'm going to go ahead and look at the next question. What he writes about is exactly the process that all of you should be doing. Always a 5-minute. JP, you're asking about linking the. There is a way to do it without radar screen. So that's a good question. Let's say you only have your matrices open and no radar screen. And now I want to jump from the CL to the Dowie Mini. I would click on dead space and then I would just type in YMZ18, enter. And it automatically is going to go there. And the others should follow. It does take having to type. It does take hopefully not having fat fingers where you mistype. And it does take a little longer. But notice it changed rather quickly. If I want to go back to CL, I would just click on a dead space and type in CLZ18, enter. And it went there pretty quickly that time. It is, I mean, it's pretty quick. So that there is a way to do it without radar screen, and that's how you do it. And I never would have even thought of it until you asked. So good question. How can you read the matrix to see whether the buyers or sellers are in control? I mean, you have to learn a little bit about tape reading, and I'm not really that good at it. I don't really know much about it, but you do kind of see immediately that you've got 11 on the ask and 2 on the bid. You could also see where most of the activity took place. Like you could see the volume of trades that took place in certain price levels. And so it kind of shows you maybe areas of congestion. If you're trading through a zone where there's hardly any orders at all, chances are the price will move through that a lot easier. But I don't really have a direct answer. I don't really know the answer. You might try other indicators. That's what people get into, the whole market breadth and some sophisticated volume studies and stuff like that. But that's kind of beyond the scope of what we do. And ultimately, because of how the indicators work, presumably when you get a short trade, let's just look at this one here on heating oil, it's because the odds are the market's about to go down. So I don't really care about the other stuff because I got to trust my trade. If that's the next trade in my trade plan, and that's what it is, my trade plan quits positive most of the time and grows my equity, why do I want to muck it all up with too much information that all of a sudden I'm thinking, oh man, the buyers should be in control here, I better not take that trade, and then that's the trade that would have put you over the top. So a lot of that information is just implied in the price action itself. That's what I believe. That helps keep things very simple for me. The price action is the collective wisdom of the market. All the other stuff, lagging indicators that already happened. We have the benefit of hindsight. We're trading on the right edge of the chart. So, I could see how you might be able to avoid some losing trades. Let's face it, the long trade here loses. Sure would be nice to avoid it. Maybe if there's some market breadth or some sort of other indicator, you might be able to avoid that long trade. But does it really work? Because when you avoid that long trade, you could be avoiding a whole lot of winners too. And so now you have to go back and get a big sample set and really make sure it's productive, whatever that additional thing is that you're adding. And there's a good chance it's not productive. It might only have been productive on the one trade that you're trying to fix. So that's why I say stick to your trade plan. Stick to quitting positive most of the time with minimal trading. Prove that to yourself first. And then 6 months from now, realize you'll be better than 6 weeks from now. And you will have seen enough trades and have learned the personality of your market. You will have seen various looks and feels that repeat themselves every so often. And you'll start to recognize, oh, I've seen this before, and this is a choppy, unruly market that there's no rhyme or reason. I'd just rather stay clear and come back and check maybe 30 minutes later, or when, after you've seen 5 or 6 losers in a row, the next trade's probably going to win because that's just how the odds work. You could learn other survival tactics to get through crappy parts of the session. But don't expect to know that right away. You have to allow yourself the time to get time and experience, which cannot be taught except from time and experience, right? Don't be looking for the holy grail because you don't like that losing trade. That's just you end up shooting yourself in the foot or the forehead. You're better off proving that the trade plan quits positive most of the time. You can do all that with your money safely parked on the sidelines. And then if you want to introduce some other thing, you still have now the techniques on how to prove it first. I think that's the most important thing you could be doing. Hopefully that gets your question. Puggy Man, no slippage on Ninja. Yeah, that's great. I guess it depends on your broker. Slippage equals getting, all right, well, orders are filled in the sequence in which they receive. While waiting for your order to come up, the market keeps moving and your fill is delayed. Yeah, first come, first serve. James, how close are you and the programmers getting? All right, we already did that. That makes sense. Swing trade, but right now I want a day trade, so we'll in the bracket order. Yeah, day trading is really cool, James, if you just limit it. Limit it to a certain amount of time. You don't. You sent me an email and you just had this ambitious, I want to do this, I want to do that, I'm going to trade this, and I'm going to trade that, and the trade. Yeah, you're enthusiastic, and I totally get it. I get your enthusiasm. I felt that way too 20 years ago. But believe me, when you've been doing it in and out over and over and over and over and over and over and over, multiply that exponentially, your eyes get tired. Eventually you just kind of like, man, I don't even want to do home videos anymore of my kids because I'm just too tired of being in front of the computer. Then you're just overdoing it. For me, I just want to make my money and get the heck out of the way and go do something else. I'm not trading to trade. I'm trading to do other things. I'm not living my life to accommodate my trading. That's always a mistake because eventually it catches up to you. It's good to be enthusiastic. Don't let me, get you down. But imagine yourself 6 months from now, 6 years from now. You want to project into the future and get kind of a trajectory and on the pathway that gets you to where you want to go. And it all boils down to answering that fundamental question in the Steps to Success guide is why you're trading in the first place. You have to get that answer right, and then it has to be reflected by your actions. I can't even tell you anything more valuable than that. Because a lot of times you'll go, yeah, I'm trading, I want to make money. But then you do things that are counterproductive to that. So are you really trading to make money, or is there something you don't understand about yourself that you need to really figure out? And I'm not saying that's you, James. I'm talking in general. For you, it's just you're very enthusiastic, which is great. But you don't need to trade this and trade that and trade this and trade that and then go to that and then do this and then do that. I mean, you're going to need a staff of 10 people, and hopefully you train them all to be as good as you. And now you have new headaches. You get one thing right, one. And once you've got that going like a business, maybe you hit a goal and that triggers the next progression in your business, that you're in the rite of passage to add a second thing. And then you got to work the two together and see if you can do those without a mistake and get those two things right. And eventually you hit some more goals. What are you going to do next? What's the next progression in your business? What about paying yourself? What about adding another contract? Other things, not just adding more markets, not just adding more trading. Eventually, you'll have to buy some Velcro and put it on your rear end so you can't get off your seat. You'll be so married to your charts. That's no way to live. You'll see. Yeah. But it's hard to be in the place you're in now and then think down the road and where you want to be. So try to be realistic and always think in terms of balance in your life, not just trading. Trading is a component, a thing in your life. It's a means to an end. Don't make trading the end. Trading is your bridge to get you to where you want to go. I got a guy I've been dealing with for years and years, and he used to ask me so many questions. I used to think he was the biggest pain in the butt. But the thing is, his questions were always good questions. It's just that, when do they end? So many questions. He really made me work. But I'll tell you what, he was the best kind of student. One day he showed up to one of the live events, and I met him in person, and he was just the sweetest guy, the nicest person you ever want to meet. Respectful and pleasant and nice. And I later learned, that same day actually, that he had been following my advice from the beginning through all my different trade strategies, all the way back to the SST days, through Trend Jumper, Counterpunch. And now he's hit his critical mass. I mean, he lives on the French Riviera and he trades the DAX. That's it. One market, one trade plan. He hit his maximum size, and he's got it made, man. He sits on his veranda sipping a bottle of wine, watching the sunbathers walking by down the boardwalk. What a life. Anyway, great story, but it's a true story. You don't have to overdo it. You just have to do one thing really, really good. What else? So you're saying the software helps to simplify your approach to a trade, keeping your emotions out and absolutely staying on track with your trade plan. Yeah, that's a good point, James. The software is a way of interpreting the strategy. So like I always say, and if you're in the trade room yesterday, you would have heard me say it. In fact, I just put a video up today. Same theme as I walked through the crude oil trade session today. The strategy exists beyond the indicators. The strategy exists, and then the indicators help us interpret it and make it easy to use to trade in real time. So we're not thinking and measuring and figuring things out because the market's not waiting for you. right? So the indicators are just convenience tools, right? Like you can use a rock to nail in nails and build your house, or you can use a hydraulic nail gun. But the nails still exist, whether you're using a rock or a hydraulic nail gun, right? So your brain is the rock, and the indicator is the hydraulic nail gun, just as a metaphor. Terrible metaphor, but you get the point. So the indicators are there to help you see the setups and stick to your trade plan, but you don't just take random trades. Like you're not just going to open up your chart one random time, one random day and take random trades, because now you're relying on lady luck. It's a double-edged sword. We don't win 100% of the time. Even if it's a trade plan that wins 90% of the time, loses 10% of the time. But 10% of the time could be 10 losses in a row, and it will be, trust me, probably the day you start trading. It's just the way it works. It's random. There's a random distribution of wins and losses. So we have to operate beyond that, and that's why I always say it's all about the results of your trade plan. Read the quote I just put up there that Charlie wrote me today. I mean, he gets it. He says it. I couldn't say it any better. He did it. He discovered it. So your job should be to prove it to yourself. Get measurable results so that you can believe in it and see and live through the good, the bad, the ugly, the great, over and over and over. The good, the bad, the ugly in capital letters, the great in capital letters, over and over. And yet when you step back, you witness the equity curves going up and up and up and up. Not until you experience that should you risk your real money. Because you can experience that and keep your money safe. And in so doing, you will evolve from that person trying to trade into someone who's actually a real trader and a CEO of a trading business. And that's what you want to be. So it's all about the techniques in the success guide and learning the strategy and then marrying them both together. And that's what Charlie talks about in the email he wrote to me. And that's what I've been talking about, like what, for the last 13 years. What else? So you're saying, I'm gonna start trading this. What is the setting for HO for Ninja? Len, I would just do same as unleaded, just a 20 range. Puggy Man, should I use tick charts or momentum bars when trying to trade 30-year bonds with a ticker? Oh, gee. Well, if you're going to do 30-year bonds, do the sniff test. Make sure that you've got, that you pass the test. Let's do that. Let's take this. I'll save this unleaded chart because or this heating oil chart. We can go ahead and look at it in the trade room and just kind of start checking it out. Let's make a 30-year T-bond chart. My thing with T-bonds is that I don't know that you're going to get enough consistent action that's going to pass a sniff test. So we could look at both. I mean, I think if you're going to use tick charts, you might be better off with Counterpunch Trader. But with Spotlight, I probably would rather see you with a momentum bar of sorts, but we could check it out. So that's going to be USZ18. And if we do a 3-tick momentum bar for the heck of starting with something, just to do that, well, I've got my handy dandy binder here with a cheat sheet where I've got my stocks and my fractions and my decimals. So I could easily look at 3 ticks, which is 3 over 32, and see that it's 0.09. So you make yourself a cheat sheet for one thing. So 0.09, we'll look back 8 days, and let's do a sniff test. All right, well, you could see winning trades. They're right there in front of you. Does it pass the sniff test? Let's go with an 8:30 start time for lack of, just for keeping all things equal. Actually, with T-bonds, you might be able to start even earlier. You might start at 8 o'clock or even earlier if I remember right. But here's a setup that's at 7:30. And then here's one that's at 8:36. So if we're starting with 8:30, then it looks like there's enough trades. You got 1, 2, 3, 3 trades. It takes you to, well, you got 3 trades in 2 hours. And then you have a 4th trade over here that's already way in the afternoon. I don't know if that passes the sniff test. Are there enough trades in a session? You might only need 1 trade if you're winning 75 or more % of the time, and you might be. I mean, is this a secondary market, a third market? So, you know, you have to look at more sessions, basically. You have to, you know, you got maybe 3 or 4 trades in a 2-hour window. Maybe that's enough, maybe it isn't. So look at another session. So here we go, 8:30, right in this area. You finally get a trade here at 9:40. Not a lot of bars. Another trade here at 10, almost 11. I mean, to me, so far it's not passing the sniff test. Dirk, to answer your question really quick, I believe it's just the NQ, and I'm guessing it's a 4-point momentum bar. So I don't know exactly. He didn't say. But that's my guess, because that's kind of what we use. Anyway, so Puggy Man, back to your question. It's similar to the other question you asked, really. You have to do the 3-step sniff test. I mean, it's such a marvelous technique because you could assess any chart and determine if it's worth your time and attention. Whether it's U.S. bonds, whether it's adding another indicator to confirm or deny or filter, it doesn't matter. It's all about the 3-step sniff test. So if you ask me something, I'm going to have to do the sniff test to know the answer anyway. I don't know everything. In fact, I'm the first one to tell you I don't know much. Maybe I know a lot more than most people because I realize I don't know much, and other people think they do and they don't. It's another argument. But I think the sniff test is going to be how you assess any chart that you want to pursue. Bonds can be very profitable. I just don't know that it's going to be worth the hours and hours of waiting for a trade. I mean, these are only 3-tick bars. If I look at, you know, I'm not seeing a lot of range. That's the other thing. It's a 3-tick range bar, and it's having a hard time getting very far. I mean, this trade finally gets to almost target 2, and it triggers in at 9:37, and it misses by 1 tick at 8:46 at night. I mean, really? I wouldn't be interested in that. Just saying. But that's what makes a market. You know, don't listen to me. I'm just saying, from my own point of view, I want to be done in 8 minutes, not 8 hours. Brian, are there any live events coming up? Brian, when you say live events, do you mean where we all kind of get together and meet live, face-to-face? Like in person? I mean, okay, because I'm saying we're in a live event now. You know, Mike and I have discussed it, and we're actually open to maybe doing one at some point. The hard thing is in the past, whenever we put a live event together, I mean, everyone is all over the world, so how do you choose where it's going to be? I mean, that's the trickiest thing is figuring out when to do it and where. So in the past, we've done it in Las Vegas, and maybe a dozen people show up. I mean, there's hundreds of members, and a dozen people show up. We've done it in LA, and 8 people showed up. I've given live trainings in London, and there's a lot of Brits over there that are using our stuff. 6 people showed up. They actually live over there. So doing a live event's kind of tricky because it's hard to get people to commit. There's expense. I would do New York in a heartbeat. I love New York, but New York's very expensive. It's not, you know, for me, it's like one of my favorite places in the world. But for others, it's like, man, I'm going to have to mortgage my home to go to New York. So, yeah, French Riviera. I don't live in Texas, James. I'm in the Napa Valley. You guys want to come to Napa? I got a great winery I'm a member of. I mean, another idea would be to do something like there's a big money show in Las Vegas. So now there's 2 reasons to go to Vegas, right? The money show and maybe a net picks inner circle gathering, piggybacking on another big event. Yeah, that might be a good idea. Right on, Ron. Wow, we are totally neighbors. We're more neighbors than James and I. So the three of us, California. But I don't want to do some event in my backyard. I'd rather go somewhere fun. I mean, you guys might think Napa's fun. For me, it's just like, I already live here. Been there, done that. But Vegas would be fun. I mean, let's just keep it open. If Mike and I are going to end up somewhere at some point, maybe we'll try to plan a live event. Yeah, New York has a show every year. Vegas too. Yeah, right. The Traders Expo. That's what I was referring to. I mean, Paris has the Salon du Trade, or I forget what it's called. I actually was there and gave 2 presentations. And it was amazing. I had an interpreter and everything. I'm up on stage. The room is packed. That was great. That's the day I met John Carter. Okay, so Charlie Lee, bringing us back to Earth, so that we're not just sitting here daydreaming of Paris and Vegas. We'll look at no, that's okay. You're right. We're almost finished here. So yeah, let's look at Spotlight 2.0. But before I do, Dirk was asking what trade plan you were using on NQ. If you didn't answer, maybe you want to let him know. And Ivan says, one thing is for sure, that trading undercapitalized is super hard. It's even harder on your mental aspect of trading. One must build your trust and connect seamlessly with the trade plan if you want to be successful, in my opinion, and I agree wholeheartedly. Well said, Ivan. Len, are my settings correct? 5 range bar. Yeah. Len, I think those are both good charts. I don't know about HO. I mean, I only looked at it just now. We used to use it a lot with Trend Jumper or even Counterpunch, and it was fantastic with 7 Summits Trader. And it's probably fine with Spotlight. It's just that we used to use a 33 tick with unleaded, and when I sped it up to 20, unleaded's just been really great. So I haven't really looked at heating oil, but I don't see any reason why you couldn't apply the sniff test and figure it out. Oh yeah, okay. Well, yeah. So I don't mind forwarding your email. Oh man, who was asking that again? Dirk. Dirk, you need to send me an email so I could forward Charlie. Oh, there it is. So Charlie, maybe you could just send it to him. There it is. Thank you, Dirk. All right. When trading the Wednesday oil report, will that work on heating oil? I don't know. Good question. Probably. I would check it out. That's a good idea. Puggyman SPT 2.0 seems to have more potential winner opportunities than SPT 1 or Counterpunch. It's just different. I mean, SPT 1's great. If we add nothing else to it, I mean, it's just that, you know what? The histogram trades are just misunderstood. If you guys spend more time learning how those histogram trades work and why, you get better at them. The pink, the blue, the green, those are great trades. You just have to learn when to stay away from them and how to focus on the best ones, or just create a trade plan where you're quitting positive most of the time, and who cares if there's a losing trade in there here and there. I mean, you know, you're not trading to just try to win every trade. You're trading to make money, so therein lies the difference. It has nothing to do with SPT1 or SPT2. They just do different things. So with that said, let's look at SPT2. So SPT2 can do a lot. We can turn it into SPT1. All we have to do is turn on those 3 trades, right? You got your pink and blue, your green, and your yellow, those 3. If we want to turn off the histogram trades, which you might find a reason to do that, it really just depends on how you're going to quit positive most of the time with minimal trading in the end. You can turn those off, and instead of a green trade, now you have a blue trade. I mean, it ends up being the same trade, just a different reason. Go figure. So, I mean, I think one good thing, well, first of all, it helps to have a chart that's still being traded. The X contract is no more. Yeah, so there's a new setup that is not, well, there's several new setups, and you can turn them all on or off. And I wouldn't turn them all on. I would just isolate and focus on some of them. So you see this red trade? That's a really interesting trade. The red and the orange, and then there's a pink one too. So if we look at the calculator, there's a setup that's brand new. You guys have never seen it before except for when I've briefly talked about it. These are the dot proximity trades like the yellow trade, but you could trade them off of different moving averages. So we're going to turn those off for a moment and focus on these three. So see where it says open on EMA 1, open on EMA 2, open on SMA. That means that one of the bars on the three dots has to open up on one of those EMAs or an SMA. And, you know, we'll just say 50, the 200, and the 20 SMA. You could change those. You could certainly use the TA and test some stuff. So that's a really interesting setup. I mean, if you sit there staring at your chart trying to wait for that to happen and find it without these indicators, we'll come visit you in the Napa Funny Farm because you'll go crazy. But having the indicators do it for you is great. The other thing I would do is probably turn off the filters, because I think they're a moot point when these setups occur. I believe they're more powerful than the filters, and I don't see a reason to keep the filters on. Well, here they're off. I do have another filter, which is your SMA cross. Oh, that's not it. EMA crossover confirm. I'll turn that to false, and we could talk about that in a moment. All right, so the filters are off. Now all we have to do is turn the EMAs on. So that's the thing, is you want to just set up certain charts and then make templates so you can quickly go, you don't want to look at everything. I'm going to turn the 5 and the 21 off. We'll use those for different reasons. I'll turn the 20 SMA on, the 200 EMA on, and the 50 EMA on, because that's what we're using these setups with. All right. So like this red trade here, one of the three bars has to open on the 20 SMA. And you could give it a tolerance, like if you want it to open 1 tick away or 2 ticks away or exactly on it. And there is, I think, a little buggy boo I want to change with the doji opens on it. I need to eliminate that because that's not the spirit of the trade. It has to open on the line and then close up in the direction of the trade. If it opens on the line and closes down, we don't want a long trade. It has to open and close up. So like this one here opens on 66.05 and the average is 66.04, that really shouldn't qualify. But the reason it does is because of the doji. And that's something I have to get with Will. And in this case, it actually works anyway. But that's the nature of this trade, and it's a really good trade. I mean, on certain charts, you go back and start counting wins and losses, and for every 9 or 10 wins, you find 1 loss type of thing. I mean, I think this works really, really well on certain charts. There's a tolerance right here where you could tell it how many ticks does the open have to be on that line, and I like 0 because that seems to give the best results of all. So like, for example, on this red trade, you have to look at the 3 dots. Well, this bar here, the first dot, it opens at 66.11 and the line is at 66.11. So that qualifies. It opens on the line and it gives you that nice setup. Almost hits target 2, right? Misses by 1 tick. And we're talking about, 6:30 at night, 9:30 at night or whatever, not 6:30, yeah. So, I mean, just looking back, this one, you had the open on the 50. That one didn't quite work as well. But look at these. Some nice trades, yeah? So that's a really great setup. I like it a lot. I like the blue line better than, I think, the yellow line, because the 20 SMA is a great pullback line. Another line that works really well is when you finally get a trade on the pink 200. That one didn't trigger in, but this pink color trade wins a lot. They just don't come up as often. Here's a nice orange trade. The orange trades work. I just, everything just depends. So anyway, Len, we're looking, I want to start the Ninja Trader coding in November. So I'm hoping that by December, we'll be able to release 2.0. That's what I'm shooting for. Okay. So anyway, a trade that you're going to miss unless you turn it on are your proximity trades. These are like your yellow trades, but using the blue moving average. And these are some of the most wonderful trades in a trend. And notice that there aren't any trades. That's because we have to go into the calc and turn those on. So one thing you could do is use the open on trades and then turn on your proximity trades with your SMA. So you might do one of those, like this one. I mean, you could do all three even and see if you like it. But this one is where the dots are within 4 ticks of the line. In this case, the 20 SMA. And those are just going to give you those beautiful trending continuation trades. You see, all the way down. When you get in a trend and catch that, I mean, literally, you can have a position that just trails the blue line all the way down. You don't have to always just trail the balance line. You could trail the blue line. When you have them tracking parallel and in the same direction, you always want to look for the lines spreading apart with momentum, and then you could expect the action and the reaction as your pullback. You got your exhaustion dots lining up right on that blue line, setting up the subsequent action moves. Those are very tradable and predictable. That's the whole theory that the Spotlight's built on. The immediate past predicts the immediate future. Because that's what that's telling you. Action, reaction, subsequent action. The first action is the immediate past, along with the reaction. That might even be the present. The immediate future is the subsequent action. And it's very predictable and tradable, and that's what you should focus on. If you could just learn to isolate those, especially when you got your lines all lining up, man, you don't need much more. Let me put a last call out for questions. I'm going to just show you a couple more things really quick, and then I think we're going to wrap this up. So just to, I went through this a lot already. You may have missed it, but there's a couple things that are also pretty cool that you might really like, and they utilize 2 more EMAs. I got the 5 and the 21, but you might use a 5 and a 13 or 2 others. You'll have the ability to play with it because these are all also in the trade assist. And you can certainly optimize and find some really cool things. But let's just go with the 521, and I'll explain to you a couple ways you can use it. Eventually, you might have like so many lines on your chart it gives you a headache, but just for the sake of argument, that aqua is the 21 EMA. Where's my 5? It didn't turn on. And my 5 is the white line, because it really stands out. So there's two other trades. Well, first of all, you can turn on as many trades as you want and then have a filter that says only make valid those trades where the 5 is on the right side of the 21. In other words, if you're going short, it has to close on the short side of the 21. And it'll be a little bit of a lagging indicator at times, but you can exercise getting in sync techniques, and I believe you should. Getting in sync techniques will work great. The calculator does not have that ability, and I doubt that's going to make it into this iteration. But you can learn those techniques manually, and that's fine. It's very simple. You just wait for the condition, and then you take the trade. It's no big deal. But the idea is you can turn the filter on right here. EMAs cross over confirm, and you set it to true. And now you're going to see a bunch of trades turn to gray because they don't meet the requirement. And some will be winners and some will be losers, like right here. But a trade like this, if you're getting in sync, you just take the trade when it pulls up right here and you get filled. You see? But the calculator can't do that, but you certainly can. But here's one where it is already below, and that's a really nice trade, right? Same with this one. This is giving you some great trade. So on a trending type of deal, this is a really great, it's almost like a no-lose situation until the trend ends, you know, and it's not going to work very well with reversal trades. Like if you had the OSOB trade, you'd get a nice blue trade, you know, finally, and that's going to win, but the 5 will never get above the 21 on time, and it'll end up taking the trade too late. So you have to know how to use these, and it doesn't prevent all losing trades, especially in a sideways market. But you could see that it's catching some beauties. So that's a filter. Another thing you can do is you can turn off the filter. And you could focus on this one trade setup that we haven't really talked about yet, and we'll turn off all the others. You could have different workspaces with different trade setups, and then ultimately you want to stick to your goal of being able to quit positive most of the time with minimal trading. You know, any one of these ideas could work on any given chart. It's a matter of what fits your personality and what you prove to yourself is the most productive. What this does is it only takes setups where the 5 crosses over the 21 and you've had exhaustion dots. But it's not going to take your typical spotlight setup where that first bar that closes on the other side of the balance line is your setup bar. It's going to take the one where the crossover occurs. And I didn't know if I wanted that or not. That wasn't what I explained to Will, but that's what got programmed. And then I thought, well, let's just keep it because it seems to work pretty well. And we could always use the filter to give us what I was asking for anyway. So this is like a whole brand new setup. It's in white only. And you can see that it often works really well. But it often doesn't. So, you know, like see where this gets long right here? If this was a spotlight trade, it would have been long on that bar. So that's the spotlight trade. And that one probably would have worked. You know, 21, it got you to money management. This one comes 4 bars later because that's when the crossover occurs. So I'm not sure if this is a good idea or not, but there seems to be a lot of good trades, and it could be, you know, we just have to work with it. This is why we're beta testing. Certainly worked well there. So, I mean, it's just another setup, and whether it's good or bad or we keep it or not, I'm not sure, but you can see there's a lot of really good trades. You can catch big moves with this idea. So, you know, you turn it off, and then maybe you play with it when you're ready to play with it. But that's basically it, guys. I mean, there's a lot you can do, but you don't need to do a lot. And I think the bigger message is to do less, not more. All this is really designed to do is give you more tradable patterns, you know, with a high percentage outcome in your favor. That's the bottom line. And you just got to prove it yourself and not stray from the success guide and all the techniques of doing your pre-production work and proving it to yourself first. In the end, that's the most important thing, no matter what setup you use, right? But the Spotlight 2.0 is going to have a lot of capabilities. I would not just throw away the OSOB trades. Those trades are money if you know how to use them. I mean, what's better than that 4th reversal, right? The first 3 you stay away from, and then that 4th one. I mean, that's such a high percentage winner. Probably wins at least, my guess is in the high 70s, low 80% of the time. Who doesn't want to trade like that? All right, I think we're done. Ivan, thank you so much. Appreciate the kind words. Puggy Man, I didn't turn on add-ons, but yes, you can turn on the add-ons. Yeah, you can. It won't track them, but it'll show you the setups. So you certainly can do that. When 2.0 comes out, will you set up a special training? Of course. I will have video training to go with. I probably should start working on it fairly soon. Also, as long as you're an Inner Circle member, you have access, and as long as you own the Spotlight, you'll get it. But, I mean, this might be the last chance, because eventually there'll be Spotlight, and then there'll be the 2.0 upgrade. It's going to cost extra, but you guys won't have to worry about that. You're all going to get it. No extra charge. I'm ready to open up a bottle of wine, Charlie. Thanks for that, Ranjit. All right, guys. Well, thank you for spending the evening with me. And we have a lot of people in here, more than I didn't even look at the 30-plus members in here till now. Can't thank you enough for joining me. I hope I got all your questions answered. If not, this is always ongoing. You know, there's tomorrow, the trade room crude oil session. By the way, I use Counterpunch for the crude oil session, as you know, for the inventory report. But Spotlight might even be more productive. Spotlight's just as good. I just think Counterpunch for me gets me done quicker. So, and you know what? No one ever asks me about Sub-Zero. So either you guys don't like it or don't understand it. But Sub-Zero is another really good setup, and you guys can easily test it. I wouldn't just, forget about Sub-Zero. I think Sub-Zero is really good. Anyway, that's another discussion. We didn't get into it. I was kind of surprised. I was waiting for a question on Sub-Zero, but either you forgot or weren't interested or both. I don't know. Anyway, don't forget you have access to that. It's in the Owners Club also, and that's fair game when it comes to questions. Just follow your techniques, right? 3-step sniff test, only in this case, you're probably just counting winning and losing trades, not, well, you could do sessions also, I guess. Anyway, you get the idea. Thanks again, guys. I'll see you guys tomorrow. Have a great evening, everyone.